Welcome back, everybody. We are back again with another video, and in this video I will be showing you how to truly perfect your analysis, and it will be a trade breakdown on GBP CAD overviewing a market maker buy model. So before we get into the video, I kind of want to clear up some FUD in the prop firm space. If you guys are looking for a prop firm to use or trade, I would always recommend utilizing prop firm match, because this is how I've been finding my prop firms to trade as of recently, given the fact that we have had, for at least US clients, I haven't been able to trade on MetaTrader, but this actually helps my way to find new prop firms that are trustworthy to use. If I simply go about my process and I pick my 200K account, my two-step, and then I click United States, where I'm from, I hit search, it gives me the full list of prop firms that I can choose to trade from. And the best part about it is the reviews. If I click on any one of these prop firms, it will give me a full-blown trustworthy review of someone that has passed a funded account and also have received payout. So moving forward, if I ever have any sort of interest into expanding my horizon to allocate more funds from prop firm capital, I would always use prop firm match to search for a new company. If you are interested, I'll leave a link to this website in the description of this video. Now, we're going to be starting off by utilizing the euro pound. And you can use the euro pound to identify if the euro is either weak or strong, or if the pound is either weak or strong. And now just a quick kind of explanation here. If euro pound is bearish, then that would mean that anything that is pound XXX cross is bullish. And if euro pound is bullish, that would mean that anything that is pound XXX bearish. And vice versa for euro. If euro pound is bearish, then that means that euro is bearish. And if it is bullish, that would mean that euro is bullish. But on this chart here, we have price on EG trading into a monthly premium, and that is actually an external to internal range move. So price moving from internal, now what would be the next draw? External range liquidity. So my draw on liquidity long term for EG would be these relative lows here. And you can see in the month of April, we tapped this monthly bearish order block. So I'm still anticipating these lower prices. That would mean that pound would be strong compared to the euro. And looking at the weekly chart, you can see that price on EG was consolidating for quite some time, and we had a manipulation wick from last week into this weekly internal range liquidity pool. So now I'm anticipating the next draw being the external range, at this low being a low-hanging fruit objective point, and then eventually getting to that monthly external. So now that we have an understanding that the pound would be more bullish than the euro based off of what EG is telling us, we can utilize CAD futures since our focus is on GBP CAD. So if CAD futures are bearish, that would mean that anything that is XXX CAD cross would be bullish. So if we're going to correlate these two things together, if EG is bearish and CAD futures are also bearish, moving from internal on the monthly to external, that would mean that GBP CAD would be having extreme strength compared to Euro CAD. And if we look on the weekly chart, even here, we have this week and the previous week as well trading into a weekly premium, this internal range liquidity pool. So we're simply just targeting a weekly internal premium tag to external range target. So this would be our weekly objective point low. So we covered our strength indicator and our futures chart to indicate to us that GBP CAD would be the prioritized long position that I would want to take. But I have our blank chart as always on our weekly. Annotate the chart, and let's see if your annotations match mine on the next slide. So if we look at our correlated lows, you can see here we made a higher low on GBP CAD, lower low on Euro CAD, but we made a lower low on GBP CAD here and a higher low here inside of this weekly internal range liquidity pool. Now, given the fact that I always say trade the stronger asset inside of the higher time frame key levels, when CAD futures and Euro pound are both aligning me, showing strength out of the pound and the euro, I'm going to favor this pair compared to this one, even though we have the fair value gap tag compared to the low run on GBP CAD. So this is my priority to these relative highs. Now do the same thing that we did on the weekly, do the same thing on the daily, mark up the charts, and see if it matches my annotations on the next slide. So the closer look here, you can see the correlated lows resting in here, that GBPCAD made a higher low on the daily, and EuroCAD made the lower low. You could see the clear weakness out of Euro compared to Pound, and that was the screaming indication from Euro Pound. So that gave us the assist to show that we should definitely be prioritizing GC compared to EC. And we had on Monday trade through this daily bearish fair value gap. So I'm going to assume that this would be an inversion support to push to higher prices. Now we'll do the same thing on our 4-hour chart. We're going to be annotating this, and I'll show you the annotations of mine on the next. You can clearly see how this on EuroCAD has been completely lagging compared to the absolute strength on EuroCAD on our 4-hour chart. And it's a clear depiction of a market maker buy model. These are the correlated highs resting here and here. And you could see that GBPCAD, once we traded through this daily inversion gap, look at what happened when we were creating short-term lows here. And that I've said this in previous slides. Once we created the short-term lows, price swept the short-term lows and created SMT divergence. So we created SMT divergence, making an intermediate term low. That is a big focus point that you want to pay attention to when you're trying to seek entries or indicate strength in a position when you're going long. And after we created that intermediate term low, we consistently made the higher lows compared to EuroCAD making the lower lows. After that, confirmed a breaker block, fair value gap inside of that, and price pushed and continued, moving into Tuesday's price action, which was my focus point. So now that I have that clear indication, I can focus Tuesday because we had CAD high impact news on that day. So I can only just focus on this to complete our market maker buy model to that 172,400 level. So our news was GBP CAD for 8:30 a.m. on Tuesday. And as price continued on our 4-hour chart, you have our clear market maker buy model, this being our original consolidation. I've said this before, on the sell side of the curve, there'll be up close candles, and you want to drag those out to the buy side of the curve once we have our indication of a proper reversal point. And you look for PD arrays to form inside of these zones. So I had this 4-hour bullish fair value gap marked off that is resting in premium of the range. So if we're labeling points of our market maker buy model, I'm labeling this here as our smart money reversal that created the SMT at the weekly and daily lows. I'm labeling this here as our low risk buy, because you could even see the up close candle here. Once we closed above it, drag it out, this could be labeled as a breaker block, low risk buy. Price then pushes up above into premium, and then look at what happens when the intermediate term low gets swept. What does it do? It tags discount again. So this would be our then accumulation buy to continue price higher, and then we have reaccumulation at the short-term low to the right, and then we have more potential reaccumulation in premium of the range, because once we're above 50% of the range low to high, that is when you're going to expect a silver bullet or reaccumulation to form in a market maker buy model. So if price came down into here, I would not expect it to trade lower and it to respect all bullish PD arrays to continue to the higher price draw on liquidity. And easier said than done. Look at what happens when news sweeps the lows resting here. We tag the 4-hour bullish fair value gap inside of this mitigation block. That creates more SMT divergence with EuroCAD and then drives higher. This was an institutional order flow entry drill, reaccumulation on the buy side of the curve, continuing to push price higher to that higher time frame draw on liquidity. And we traded through this old bearish fair value gap, and we're going to use this potentially to continue higher because old selling equals new buying. So this should be support. This low should not be violated, and then we should eventually complete our final drawn liquidity target to the 172,400 mark point. Now, when this trade completes, I will make a full-blown trade breakdown, put it on Twitter, as well as make a Instagram reel to show you guys just a short-term form content as to what I saw and how I executed on it. But I hope you guys enjoyed this video. This is just more so of an incorporation of utilizing a strength pair indicator and CAD futures as well as SMT Divergence to put an all-in-one platform to give you also an overview of a complete and full-blown breakdown of a market maker buy model that I took for a trade on GBPCAD. But like always, I hope you enjoyed. If you have any recommendations, drop them in the comments below. But I will see you guys in the next upload next Wednesday.